Hi, and welcome to my channel, where I will be sharing my passion for personal finance and investing. I love researching income-generating stocks and ETFs, and on this channel, I will document my journey to building wealth and share everything I have learned along the way. Please remember this is not investment advice, and all investments carry risk. Always do your own research before making any financial decisions. Today, I will be talking about why I choose dividend investing and how building a portfolio of income-generating stocks and ETFs can genuinely give you more freedom over how you spend your time. If you've been investing for a while, you already know the basic idea. You buy shares in a company. That company pays you a portion of its profits on a regular basis, and that income shows up in your account whether you're at work or not. But I think it's worth stepping back and thinking about what that income can actually mean for your life over the long run. Because for me, that's what makes dividend investing so exciting. The thing I love most about dividend investing is how straightforward it is. You're not trying to predict where the market is going, you're not jumping in and out of positions, and you're not spending your evenings glued to charts. You find great companies that have a history of paying and growing their dividends. You buy shares and you hold them. You get rewarded just by holding those businesses in your portfolio. Now, when I talk about dividend stocks, I'm talking about companies that are typically well-established, financially stable, and consistently profitable. These are businesses that generate more cash than they need to run the company, and they return a portion of that excess cash to shareholders in the form of a dividend. Think of sectors like consumer staples, utilities, healthcare, and financials, companies whose products and services people need regardless of what the economy is doing. That reliability is exactly what makes them attractive for income investors. One of the first things to understand when you're evaluating a dividend stock is the yield. The yield is simply the annual dividend per share divided by the share price, expressed as a percentage. So if a stock is trading at $50 and pays $2 per share in dividends, the yield is 4%. For every $10,000 you invest at that yield, you're collecting $400 a year in passive income. While knowing your base yield is great, it doesn't tell you the full story, which brings me to something I think is even more important. Dividend growth is, in my opinion, the real secret weapon of income investing. The best dividend stocks don't just pay a dividend, they raise it year after year. And when you find a company that has been growing its dividend consistently for a decade or more, that tells you something really meaningful about the quality of the business. It means management has the confidence to keep committing more cash to shareholders, which usually means the underlying earnings are growing too. A company growing its dividend at 7% per year will double your income in about 10 years, without you adding another pound or dollar to your position. That's a powerful thing. This is also where dividend ETFs come in, and I think they're a fantastic option, especially if you're still building your knowledge of individual stocks. A dividend ETF gives you instant exposure to a basket of dividend-paying companies in a single purchase. You can buy ETFs comprised of dividend growers, companies that have increased their dividend for many consecutive years. The beauty of an ETF is that you get diversification straight away, you keep costs low, and you still collect a regular income. Personally, I hold both individual stocks and ETFs in my own portfolio, and I think the two complement each other really well. Now let's talk about compounding, because this is where the strategy really comes to life. When you reinvest your dividends, using the income to buy more shares rather than taking the cash, those new shares start generating their own dividends. And when you reinvest those, you get more shares again. It's a process that builds on itself over time, and the longer you let it run, the more powerful it becomes. In the early years, it can feel like not much is happening, and that's completely normal. But the growth accelerates as your share count increases, and what started as a modest income stream can grow into something genuinely significant. You could say there are different stages of what financial freedom can dividends provide you with. In the beginning, the dividend income is modest. Maybe it covers a monthly subscription, a phone bill, or weekly shopping. It's not life-changing yet, but it's real and it's growing. As the portfolio builds, that income starts covering more, a car payment, a holiday, a month's rent. And eventually, for those who stay consistent long enough, the income from the portfolio can cover most or all of their monthly expenses. Every dollar of passive income you generate is income you no longer need to go out and earn. Over time, that creates real flexibility in your life, the kind that's hard to put a price on. And that is the real goal for many dividend investors. When it comes to building my portfolio, the thing I focus on above everything else is the quality of the company and their ability to sustain and increase dividends over time. Companies like Johnson & Johnson, that has raised its dividend every single year for over 60 consecutive years. Through recessions, financial crises, global pandemics, the dividend kept going up. That kind of track record tells you that the business generates reliable, growing cash flow in almost any environment, and that management is genuinely committed to returning money to shareholders. That's what I am looking for, a business with the financial strength and the track record to keep paying and growing that dividend for years to come. Diversification matters too. If your entire portfolio is concentrated in one or two sectors, you're taking on more risk than you need to. Spreading your investments across sectors and across geographies means your income stream is less vulnerable to any single economic headwind. It's one of the things I appreciate about including a dividend ETF in the mix, because that diversification comes built in. For some, dividend investing may not be the most exciting strategy to talk about, but I've come to think that's actually one of its strengths. It keeps you out of the noise. It gives you a clear thing to focus on, growing your income, rather than trying to predict what the market is going to do next. And every time a dividend payment lands in your account, it's a small, concrete reminder that the portfolio is working. Over time, those small reminders add up into something that can genuinely change your financial life, and I find that very motivating. Thank you for watching until the end. I hope you have enjoyed the video. If you have any questions, please put them in the comments section and I will do my best to answer them. See you next time.